traders, Gary Wagner here, just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Monday, March 26, 2018, and this is the Daily Report for gold and silver. Modest to strong gains in the precious metals markets, with gold gaining about $3.80 on the day, currently fixed at $13.5370. Silver up about 18 cents at $16.70, all with the tailwinds provided by a weak dollar losing about 40 points at 88.63. And U.S. equities come back with a fever today, the third largest single day gain in history for the Dow, up 669 points, closing at $24,202. Bitcoin continues its fall, losing about 7% on the day, $720, with the CBOE closing at 79.30 and the CME closing at 78.95. Although it is well off of its intraday high, gold is trading moderately higher today, currently up about $2.80 at $13.5270, basis the April's futures contract. We did enter a trade last week. We got in at $13.29 and initially put our stops below the 38% retracement level, which resides currently at $13.17. However, over the weekend, I did send out a special trade alert recommending that we move our stops higher and move them to just below $13.31. All subscribers should be long at $13.29 with effective stops at $13.31, in essence guaranteeing that we are not stopped out at a loss, but with a very small profit should the market begin to move down, which I don't believe at this point it will. Now, the rationale behind stop placement was the 50-day moving average, which currently resides at 1331.90. As long as we are above a 50-day moving average on a technical basis, we are looking at a market that is truly in a bullish mode. However, statements made by Steven Mnuchin over the weekend really eased tensions about a potential trade war. That sent U.S. equities flying. It did cap or limit gains today in the precious metals that without such a statement, I believe, would have gone much higher. Currently, in terms of resistance, we still have resistance at 1365. Regardless of the fundamentals out there, on a technical basis, this has been a price point that over the last year and a half, the market has not been able to take out. And this year, for instance, we have had two occasions where this has become a market top. And traders, in terms of areas that we are looking at to provide support for gold, on the lower end, we would have to look at the area between 1336 and 1340. That is based upon these series of tops that recently appeared in the market, both in February as well as March, and some of these highs that came in just at the beginning of the year. If we do see continued weakness in the market, we would want to see the market hold at least 1336 as a supportive area before recovering. Now realize that this most recent rally, and we are now in the fourth day of the rally, which began last Wednesday when traders bid up gold just before the announcement of a rate hike and then continued to move about $5-6 higher that day, closing up about $20 on the day. Thursday's activity was muted with a small decline in the market. This, of course, is the day that we entered our trade. And then, of course, Friday's sizable $20 move took us well above, on a closing basis, the 50-day moving average. Therefore, my recommendation is to maintain our current long position at 1329, maintain our current stop at 1331. And traders, as far as silver goes, silver did rise by about 13 cents today, currently fixed at $16.71. And although today's move did take current pricing just above the 50-day moving average, which resides at $16.70, as you can see, the highs that came in roughly at the 200-day moving average and then weakened from there. As I said all of last week, we have an unusual circumstance in silver in which we still have the short-term 50-day moving average trading below the 200-day moving average. The fact that current pricing has moved us into the area in which it is just above the 50-day moving average gives us hope that we could see a rally continue in this market, but I would not feel certain about that until silver's price point at least goes above the 200-day moving average. I would get extremely bullish if in fact we saw the 50-day moving average cross above the 200-day moving average, creating a golden cross. And traders, as far as Bitcoin futures go, we have seen a pretty sizable decline, a decline of about 8% or $685, with Bitcoin futures currently fixed at $79.30. If you recall from last week's commentary, we had identified a candlestick pattern, a 3-day candlestick pattern, simply called a three-river evening star. However, the following day, and this was Friday of last week, we didn't get the kind of defined confirmation that we really need to see to give strong credence to that pattern, because what we were looking for was a day in which we had a lower low, a lower high, but most importantly, a lower close. And as you can see, we had this doji-like candle come in. However, that changed today with this sell-off. We have now seen a confirming candle on today's trading. We have a long red candle with a lower low and a lower high than the previous day. Therefore, our call from last week remains intact, in which we are looking for lower pricing. We believe that this particular day has confirmed the pattern, and our current target for Bitcoin futures as well as Bitcoin Cash comes in the low 7,000s. Roughly 7,300 is our number. That is based upon a 78% retracement, and it is a retracement from a fairly small data set when the market touched about 6,000, then went back to 11,800. Traders, tensions absolutely eased a little bit Monday, as over the weekend, Steven Mnuchin said that he was cautiously optimistic that talks will avoid a full-blown trade war between China and the United States. However, traders, it's not over yet, and we could see some extreme volatility as well as price swings due to statements as they come out. However, I think that this will take weeks, not days, to work itself through. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.